I was looking on social media, they used to call GJ the cash cow. So I used to see that and I was like, okay, so this is the pair that I think I need to master. If I could be good at one thing, this one pair, I could make all my money just from that single pair. I did get like a lot of backlash, obviously, when I did drop out of uni. Everybody in my family was like, what are you gonna do? Like, they used to see trading as it was gambling. They won't understand it until you actually are making money. Then they'll be like, okay, maybe you know what you're doing. A lot of traders, they like to watch the news. They're going through these Telegram channels. A lot of that is to confuse you, because sometimes there could be an interest rate hike and the market would go in the opposite direction than it's supposed to. If all these fundamental pages, they tell you certain pairs are bullish or bearish, if they were right, everybody would just use that. Why would you need to learn trading? The trend that happens pre-session, a lot of the times is a fake out. For example, in New York session, between 9 a.m. and 9:30 a.m. Eastern, a lot of the times market will either do a fake out or it'll do a consolidation because it's waiting for the session to open up and the volume to come in.
So I know you're well versed in SMC, and I remember yesterday you mentioned that a lot of smart money traders or a lot of new traders, we get caught up in order blocks and you just want to trade every order block. What is your qualification process to determine a high probability order block as opposed to the ones you disregard?
So,
ladies and gentlemen, welcome back to another episode. I am joined by Aman. You've flown in from Atlanta, so bro, thank you very much for joining us in New York. What is an interesting thing is we've been connected for years, bro. I forgot which year, but maybe like 2017, 2016.
2017, 2018, yeah.
Yeah, it was both when we were just starting out, coming up and finding our way in the markets. And what a journey we had. We finally made it 5 years later. We're in a room together.
That's crazy, yeah.
Let's go through. Obviously, I've seen your journey. I've seen the supercars when you were a young age. I think you were the youngest guy to have a McLaren that I know, at least. So let's talk about your journey, because a lot of the traders that I've met in North America, Canada, and also here, they're all futures and options. But I think you're the only one that I know that's stuck with FX. So, and you've had a journey with swing, scalp, and everything in between. So yeah, give me a bit of a summary on your trading style as of today.
So, as of today, I'm a scalper. So I trade gold every morning at New York session, during the 9:30 NYSE Open. And yeah, it's quite a bit of a journey. I started back in 2017, late 2017s. I was in a network marketing company, a famous one, and I was enticed to it. And, I didn't really learn anything from it, but I got introduced to the concept of Forex. And then, I had a couple people around me that were started to do this trading thing. And I was just like, yo, I want to make some money with you guys. So it actually started off as a joke that, I wanted to become rich. And then, it actually happened. So yeah, man, just put in a lot of work over the years. When I started off, I was trading GBP JPY a lot in the London session. Like predominantly 60% of my career, I actually traded London session. And then I made the shift over to New York. But it's been quite a bit of a journey. First 2-3 years, it was sometimes it was a struggle, but I was able to get everything together, like make a proper strategy through multiple mentors, learned from a lot of knowledge that's online, and basically came up with a strategy that incorporates smart money and breakout trading and a lot of retail concepts put together, but that's unique to me and what has worked.
So what is interesting is you stuck with GJ, particularly for the years that I was following. Was there virtue or benefits in just sticking with one pair? Because a lot of traders, especially in the early days, we bounce around, we look at a lot of things where you were clean on GJ for years and years. Was that by design?
So I was looking on social media and I was looking at a lot of traders. They used to call GJ the cash cow.
Okay.
So I used to see that and I was like, okay, so this is the pair that I think I need to master. So in the first couple months, I was trading like multiple different pairs. Like I was going through like Euro USD, GBP USD. But then I started to notice that if I could be good at one thing in this market, this one pair, I could make all my money just from that single pair. As I've previously mentioned in other podcasts as well, that one pair, one session, I'm very big on that. So that's why like predominantly I used to trade GJ in London session, and then that's it for the day. So I wouldn't trade around the clock. I would just stick to one pair in one session.
I remember as well, you were doing a lot of call outs, calling out the trades, and I'd always see on your stories, and it was pretty much at the same time, every day, at the same time, I'd see your win or loss, but it'd be like clockwork. Pretty much every day I'm seeing it, and it was also, everything looks similar. It was like a sharp impulse from the session volatility, London Open probably, and that kind of repetition on the trade style. So goes into the mantra that I've said all the time, which is a restricted trader is a profitable trader. And like you've just said, one session, one pair. What are the kind of limitations, or let's say checklists, are in your strategy within GJ that you're trading? Because I know it's kind of breakout, session impulse, and volatility, but what exactly are you looking for?
So I try to create a bias on the pair at least 10 to 15 minutes before the session opens. You know, I would have a clear area where I will buy and a clear area where I would sell. So when these levels were targeted, and in those areas, I would either look for the buy or sell. And it's also based off of, you know, multiple confluences of support, resistance, market patterns, candle closures. I'm big on using the 30-minute time frame and the 1 hour time frame as well to see the overall market trend. But sometimes I go all the way down to the 1 minute to get the pristine entry. As you guys might know, I trade with a very tight stop loss when I'm trading scalps as well. Like on GJ, I used to stick with just 10 pip stop loss.
Solid.
And now when I trade gold, I stick with a 20 pip stop loss. It's fixed.
So it's a hard stop loss at 10 pips.
Yeah.
Why not, based on the resistance support level or the order block, if you're using SMC, why have you chosen a fixed one? Is it for manipulations or?
Yeah, so the way where I enter is because, like, over the time I perfected, you know, the entries, and I know that at this certain areas where I enter, that if the trade usually is more than 10 pips in drawdown at that area, it's most likely that the direction is wrong in that area. But sometimes I do give trades a second chance. But 80% of the time I have noticed that because of where I enter and how careful I am on where I'm entering, I know that if I do get stopped out, it's most likely the trade is in the other direction.
Okay.
Yeah.
If you can walk me through your pre-session plan. So you're coming into the markets pretty much trading every day.
Yep.
Pretty much 5 trades a week. So what is your qualification process? Are you doing a top-down analysis? So just walk me through, like, you're coming to the session, you open your laptop or computer and you walk through to taking the trade. What is that journey?
So basically, I would say I start about 30 to 45 minutes before session opens. And
this for you is like middle of the night because you're doing London sessions.
Yes, it was literally 2:30 a.m. It was
and that was your routine for
it was my routine.
Years?
For years, yeah. I literally
Tough,
used to sleep at like 5 a.m., then wake up at 1 p.m. But
okay,
then,
we'll talk about that in a minute.
Yeah,
Let's
we'll
get through what you
that.
do, and I want to see what life is like.
Yeah. So basically, I would hop on the charts. I would go all the way from the daily time frame to see the overall market analysis on where the bigger time frame trends are. And then I would break it down to the 4 hour. What are we seeing on the 4 hour? Where are the candles? Are the candles about to flip? Where is the previous 4 hour closing? So all that would be in confluence, the 1 hour, the 30-minute, the 15-minute, the 5-minute, and all the way down to the 1 minute.
And what are you looking for? You're looking for structure? Like alignment
looking
of
for
market
structure. Yep.
Okay. And let's say, because if you're looking for like one trade a month kind of thing, you just wait for everything to align, everything bullish, let's say.
Yeah.
But when everyday things are a little bit different, what is your
everyday
process
things
there?
are a little bit different because sometimes in the 1 hour it could be bullish, but for that session, market could be bearish. And to know that, you have to go down to the minor levels, the minor supports and resistances on like the 15 and 30-minute time frame. And also, a lot of the time it goes with the trend that happens pre-session. A lot of the times is a fake out.
Yes.
I start to realize that. So, for example, in New York session, between 9 a.m. and 9:30 a.m. Eastern, a lot of the times market will either do a fake out or it'll do a consolidation because it's waiting for the session to open up and the volume to come in. So in those areas of consolidation, I would mark out the range, and I know that, okay, on top of this consolidation, this is most likely where I would look for buys. On the bottom of the consolidation, this is most likely where I would look for sells. Yeah.
But the same thing, I can echo that. When the reason I prefer London session, and I'm interested to know now that you've transitioned how you found it, but I found the Asia range was so important. And what I often found is, let's say the previous day was bullish, and then the Asia range of the current day would give me a nice bearish channel. I would just see that that's inviting in sellers, it's trapping people in. And then what would happen in Frankfurt Open, 1 hour before London Open, you'd get like a confirmation that it's going to be bearish. So then all the sellers load up, even smart money traders, you might see a run of equal highs during Frankfurt Open. And then London Open sweeps all of that and might go bearish still. But it's just that channel that builds up liquidity. And for me, Asia range became a nice frame to have liquidity sweeps, but also show me what the trap is going to look like. Before we bounce into the other ones, what kind of things are you looking for now that you've determined the session? I want it to be bullish or bearish. What are you doing to then execute upon? So you got a fixed 10 pip stop loss. What was your entry requirements? Was it the typical break of structure order block, or was there more to it? So out of the dozens and dozens of prop firms that exist in the whole space, who can we really trust? Whether they use slippage, whether they use types of drawdown, unrealistic trading conditions, every single prop firm has hidden tricks. So after thorough research and speaking to a lot of traders, Alpha Capital is definitely the best prop firm in the space. So apart from their no commissions, low spread, no slippage, great reputation, never denying a payout, because you are a Titans of Tomorrow viewer, you get a special discount on every evaluation just using the link or using the code TOT for Titans of Tomorrow.
So it's more like that range that I have marked up in the pre-session. So obviously first confluence would be the break of that range. The second confluence was obviously look for order blocks in that area or liquidity voids, you know, because certain times, you know, like you said earlier, that when an equal high is rated, but there might be an order block and the market could reverse. So look for those areas where market could turn around. So you know potentially that this could be a fake out and not to enter. So obviously, you know, it's about probabilities and preserving the capital. So taking the best setups. And I also look at overall like market structure. Like if a trade is completely bullish on all the time frames, for risk management purposes, I would risk a little bit more, because that would be a higher confluence setup. Like I like to grade my setups with A, B, C. Like A plus setup would be like something that is aligned with everything.
So I know you're well versed in SMC, but you're not a full purist in SMC. And I remember yesterday you mentioned that a lot of smart money traders or a lot of new traders, we get caught up in order blocks and you just want to trade every order block. What is your qualification process to determine a high probability order block as opposed to the ones you disregard?
So obviously I like to see, like, you know, the market patterns where the channels are and where the equal highs and equal lows are. Obviously supports and resistances are key as well. A lot of the times I feel like people just try to take any order block that they see and they don't see that on the bigger picture, the certain area is irrelevant. It's not actually going to turn around there. It's a lot of times, like, you know, with order block traders, they will get 2-3 pips in profit, and then the next candle they'll get taken out. So I start to see that it will do a minor retracement at those areas. But to avoid that's where you use, you know, the candle closure confluences as well, and the candle flips, like during the session. That's what I use, where basically if the 30-minute is flipping from bullish to bearish, that could be a potential entry point as well. So that's one of my
do you enter upon the order block that you've decided, or do you wait for a candle closure reaction and then enter with a 10
I actually wait for a reaction.
Yeah. And what time? So you're waiting for an engulfing, or you're waiting for just a doji candle, or
it could be a doji or it could be engulfing. Yeah.
On what time frame?
5 minute.
Okay, so you allow price to come in, 5 minute candle.
Yeah.
Market execution on the close.
Yeah.
Stop loss 10 pips.
Yeah.
Okay, interesting. And have you noticed when you're doing that, as opposed to just a limit, that you're getting less fake outs, let's say? Or what's the reason you do that?
Because I feel like it's additional confluence. Because a lot of times if I do have just a limit, and if the volume is really high in the session, what would happen is, due to, you know, slippage, I would get stopped out. So it just tend to be better to just wait a little bit. Like the market's not going to run away. That's always like ingrained in my head. That even if I do miss that setup, there's always going to be a retracement I can take a setup on.
Because you have a fixed stop loss, does that mean your take profit levels are also fixed?
Yes.
You have a fixed risk reward system, basically.
So with risk reward, I try to aim for 1 to 3, 1 to 5 setups. So for example, on gold, like this morning, I took a trade on gold. It was a 1 to 3 for 60 pips. So I had a 20 pip stop loss. That's what I universally use on gold. So I try to aim for 60 to 100 pips a trade on gold.
Oh, just one single TP.
Yep.
Okay, because I remember before in GJ, you'd have 2 or 3 levels previously. You've transitioned away from partials.
So like that's for me personally when I trade on my account. I give out multiple TPs because people can close 1-to-1s, 1-to-2s if they want to, because that's still profitable because of the win rate. I average around a 75 to 80% win rate in my signals. So for them to make money and be a little bit more conservative, because sometimes people don't have the time to be holding the trade over the session, or they just want a quick scalp, they can take the 1-to-2s and still be profitable. Or they could close half at every TP. There's multiple strategies to it.
What I'm interested in is how you're able to achieve a very solid, I would say quite high win rate, and still be able to trade very often, almost on a daily basis. Because if I was to say I need a 75% win rate, I'll just wait for an A+ setup that is like higher time frame down to lower time frame, everything aligned, and wait for that perfect setup. But when you're looking at the market on a daily basis, how are you able to achieve such a high win rate?
So on a daily basis, like I feel like at least 3 days out of the week, there's a setup, especially on gold during the NYSE Open, because a lot of the times the fundamentals are during New York when they come out regarding CPI or whatever housing market reports, all those red folders that you guys see on Forex Factory. A lot of them are during the New York session, and I feel like around that time, it's like 3 days of the week, 3 to 5 days of the week, you could be getting the setup. But obviously, it also comes down to practice and, being on the charts, being able to just analyze just with your eyes after so many years of doing the same thing over and over and being in the same routine.
Support and resistance levels.
Yeah.
It's quite a hot topic, I'd say, because on one side of the spectrum, you have like the big hedge funds and institutions, and they just use key levels and big support and resistance levels, and usually use fundamentals and other reasons to get in. And then you have on the other side, which is like the baby pips, a very typical retail trader. They also use support and resistance. And then the SMC guys come in and say, oh, equal highs, equal lows, they get swept. So there's a lot of ideas around this topic. And an example that I usually give is it's tough to use support and resistance alone, because if you just go on a random chart and throw a horizontal line, you will find price interacting with that as a support and resistance wherever you put it. So how are you able to find clarity as a support and resistance level, because that's something you're using profitably?
So it's because like a lot of the times, like my terminology of major levels is usually on the 30-minute time frame. So obviously the supports and resistances on the smaller time frames, they're there as an added influence just to be aware. But the 30-minute support and resistances, I feel like, are more key, and especially for breakout session trading.
Are you using a zone of support and resistance that is like multiple taps historically, or just an immediate consolidation of the day or day before?
So I do two things. So obviously I would have the immediate consolidation of the previous hour, like I said earlier about the pre-session consolidation. But to map out my supports and resistances, I do use historical data where, price has always played like multiple times, like 3 to 4 times. Obviously history always repeats itself. If you look left, you'll able to predict what's going to happen in the market.
Fair enough. Now I want to jump into a lot of people, especially in North America, with the time zone you have, want to trade London and New York. It seems like you'll have no life, so people end up picking one or the other. And you've recently transitioned, it seems, away from years and years of trading the London session, therefore for you the night session, and now transitioning to gold, away from GJ and transitioning to the New York session. Why did you transition, and how did you find that transition?
So the reason why I transitioned was because like after about 3 years of doing just London session, I started to feel like my day is just going by. Like I'm not really able to be that productive during the day. I feel like, I was spending more time just sleeping because, at the end of the day, there's a reason why there's day and night, right? And I started to realize that I need to kind of get my life together. I could do more things if I wake up early at like 8 a.m., 7:30, 8 a.m., and I could go about my day, because I only trade like 3 hours a day now, like from 9 a.m. to almost 12 p.m.-ish, and I'm usually done with trading. So since I'm a scalper, so I usually do get my setup. But I feel like the New York session is better in the North America, because obviously, you could live a good daily life. You don't have to be just sleeping all day during the sunlight and then be up at night like an owl.
And how long were you doing the night session here, the night session, London session?
So I did that for about 3 years.
Pretty much every day.
Yeah.
Tough.
It was
how
crazy.
was life then? As in, now you have the luxury that you can now pick your session because you found your strategy, you found your system. But in those early days, looking back, it was a grind, it was a hustle. Was that, do you think that was the best way? Or if you were to do it again, would you do it different?
So it was a grind and hustle. And it was also because like I was also working a job before like during the day for a few hours. I was also going to uni for a little bit. So I would not get the time to trade New York session. That's why, I was also sticking to London session in my first year. But life is different now, because I feel like, during the day, it's just more opportunities I can do. Like during the night, like it was cool, but like sleeping at 6 a.m. every day and then waking up at 2 p.m. it started like take a little bit of a toll like on me, that I can't like really just go out in the morning. I can't enjoy a lot of things that, I want to do. And I'm making money. It's not like at the end of the day, but still it's just like the realization that there's more to it, and I could master another craft just like how I mastered GJ. I could master gold, and I could master any other pair if I do back testing, multiple studies behind it. So, I started doing multiple studies behind gold for a few months. Then I finally took the approach to make the switch, And yeah, it was beautiful.
You know, I get a lot of DMs, and sometimes I don't know how to answer them, specifically around the idea of, hey, Waqar, I'm from America. I'm working 2 jobs, let's say, or I'm in debt, or I have kids. I work a factory job, and I can't find time for trading. And they specifically asked me that because I'm quite vocal that I prefer the London session, and, because I like the reference of Asia range, and because I'm trading EU and GU, usually more volatile in London, I found. And I don't know how to answer it because I didn't go through that experience of having 2 jobs in debt and these kind of things and having to trade during the night. So I had my balance with uni and stuff, but it was manageable. But I feel like you might be more well equipped to answer that situation of you were working a job, you had uni, and you were trading the night session, and you were doing it for years. It wasn't even a small stint. So would you have any advice for those people that are kind of struggling to balance life and find time for trading?
Yeah, so a lot that goes on is usually about passion, because if you're really passionate about it, you'll always find time for it. That's how I feel about it. And especially with people who work in a job and stuff, like it's like you can also stick to just trading Asian session and just trading a certain pair during Asian session. It's what works for you is the best. So like me personally, I used to take a little bit of a nap before London session, and then I would get ready to trade London session, and then obviously I would finish it and then continue sleeping after that.
Fair enough.
Yeah.
You mentioned that as long as you can backtest to have your data, you found a strategy that can work on any pair, and you can kind of pick your time, pick your session, pick your asset class. What is that process of backtesting for you? Because backtesting is a term everyone's told to do. Everyone does it a little bit differently. So in your experience, what is the effective way to backtest?
So I would say at least take minimum 20 to 30 trades in that session, in that pair. And then you'll see your probabilities and the setups that are happening. That would be the proper way to backtest it. Obviously, backtesting, a lot of times, people just put positions on a chart, but I'm talking about actually putting the setups and the trades in an actual account as well. Like, even though it could be a demo account.
You mean on a simulator or actually live?
No, it could be even on a demo account, but at least put it on the demo account too. So that would be something that you could use. But obviously, just looking at previous chart data and also using the replay tool on TradingView is pretty good as well. That would be something I would do. Obviously, every time when you're back testing, you should use obviously now there's things like trades for journaling, but what I used to do is I used to just use Microsoft Excel. I used to put my trades in there, and then on the side I would be like, all right, so what were the confluences for this particular trade? And then try to align that okay, so when I lose a trade, it's gonna be like, okay, this trade didn't have this confluence. That's why I might have lost it. So at the end of the day, just have minimum 5 confluences per trade.
It seems every trader in the US is running towards futures, and not maybe because they want to, more because FX and options, they're not even stocks. You don't have enough capital for stocks, and there's not really prop firms for it. FX and prop firms is no longer a thing in the US that I know of. And then options, people, I feel like just with the expiry and stuff like that, is not the best one. So a lot of people end up at futures, where if you stayed with gold and GJ, with the rise of prop firms and then the changes of prop firms, how would you navigate as a new trader in the current day and age? Would you go to futures, or would you, how would you navigate it with the prop firms?
I would say nowadays there's this stigma that somehow Forex is going to go away. I don't know who created this ideology, but I see it around social media. But that's not true, because a financial market cannot just disappear. And even though there's been MetaTrader regulations, there's been all these new regulations that are coming into the market, which is actually a good thing. It sweeps out the brokers and prop firms that are doing scams and whatever. So I feel like Forex is going to be here forever, and I've been doing this for so long, and I just want to stick to what I've done in the past and what has worked for me. That's why I do not want to transition into a whole different industry like in futures. Obviously, yes, it's similar trading, but I just feel like if this has worked for me, it's going to work for me forever. There's no point of me switching over into another.
So why are US traders not a fan of FX? Is it just because the leverage on regulated brokers, or what is the reason people just kind of are shying away from it now?
So it also goes down to the Forex brokers in itself. Some of the brokers that are advertised in the US are not the most legitimate.
Okay.
And a lot of times, people are denied payouts, are denied withdrawals by US based prop firms. A lot of these, sometimes these gurus who have created their own brokers and prop firms. And these people, they look at their following and, they fall into the trap and they're denied the withdrawals and stuff. So that's why everybody's like, oh, okay, Forex is a scam. But Forex is not actually a scam if you're using an actual regulated broker. Yeah.
Does it seem like it's just a dirty taste in people's mouths from the MLM stuff that was very big in the US? I remember just before COVID and COVID times, pretty much every university campus student I would see is doing those kind of chants and whatever they were doing. And then obviously the broker situation, a lot of rug pull kind of things. So I guess people are now seeing futures as the safe solution. Do you have any kind of experiences of like futures is just as dangerous, or you still got to be just as careful in futures, or do you think it's actually the place for a lot of new traders to go?
I feel like futures, you have to be just as careful because there's going to be offshore brokers that are going to be supporting futures soon too. So, a lot of times it's going to be the same market. You have to do your research and your due diligence in whatever you're investing in, whatever platform that you're putting your money in. You always got to study up. You always got to do the Trustpilot reviews and whatever you need to see for it.
As life has gone on, well, you're still quite young, but maturity in the markets and the profits that you have made, what do you do with them, with the cash flow that you get from the markets? What do you do after the withdrawal?
So a lot of times, I like to invest into watches. I like to invest in also my lifestyle because it also funnels in another, stream of income that I could do. And, I've been looking at quite some investments to do. I was in crypto, and obviously I did get out of crypto because it was becoming a little bit unstable. So I'm still looking for more investments. I was just actually looking at a real estate property the other day just to close out on. So looking at funneling into that. And I just invested in another business that is outside of the Forex space. So just trying to put money into different places, never to leave all the eggs in one basket.
I remember you also mentioned because I guess you're a young guy and have the nice cars and people talk in a city. As your reputation and obviously social media, but also your peers, your high school friends, your college, university friends, just people in the city, as that kind of name started to spread around and people started to recognize the car, as a young man, did that play with the ego, or how did you navigate that? That's that whole situation of really young, having money and people noticing.
As a trader, it's very simple. You have to find an edge and then you have to have a mind so you can follow that edge. But how do you know if you're performing correctly or not? You have to know your data, and TradeZeller is going to show you everything that you need beyond the surface level win rates and performance and equity curve. It's going to show you detailed reports. It's going to be your backtesting tool, strategy testing tool, playbooks, notes, and it's going to be a full journal. It makes your journaling easier, faster, and more meaningful. Whereas if you were just documenting it on an Excel spreadsheet or taking screenshots on your iPhone, you wouldn't be able to pull out the data that you need, the correlations that the AI within TradeZeller is pulling out for you. There's so much variety and utility within the software that I think it's essential for any trader. So the link somewhere below is going to take you directly to the TradeZeller website. I'm not getting paid. This is for you. If you want it, if you like it, go ahead and explore it, and probably you'll be using it for years to come.
Yeah, to be honest, the way I look at my supercars that I've owned and, luxury things, I usually buy after, I've hit a certain achievement. So I think about it I'm rewarding myself for this. A lot of people, they think that, it's usually just for it's clout and I'm just flexing on them, but that's not true, because supercars in itself, they have made me a lot of connections and walked me into doors that I couldn't have in the past. And I feel like, people say that supercars are depreciating, whatever, but they're actually great investments in my eyes.
Because of what you've done with them, as in the conversations you've had and so forth. Okay. And what about just family life? I guess a lot of families, and especially the brown families, they don't understand what trading is. They probably say, hey, just get a normal job or go get a normal degree. Yeah. And a few of the traders that specifically have an Asian background more resonate with this topic. So I want to hear your experience.
Yeah, so with me, it was quite similar. Obviously coming from, a brown family, at the end of the day, the parents, they always had a dream that you either become a doctor or a lawyer. And obviously I see that you actually became a dentist. So at the end of the day, the thing is, they had the old mindset of thinking, and they always wish the best for you. So I always agree with that. But a lot of times they don't quite understand that in the age of the internet, there is a lot of different things that you could do, and entrepreneurship has become a lot easier than before. Obviously, being accessible to so much knowledge that's out there. So yeah, I did get like a lot of backlash. Obviously, when I did drop out of uni, and everybody in my family was like, "Wow, what are you gonna do? Like, this is crazy." They used to see trading as it was gambling. They never understood that there's an actual strategy behind it. So obviously, they won't understand it until you actually are making money. Then they'll be like, okay, maybe you know what you're doing. So at the end of the day, to the beginner traders, I always recommend that, no matter what anybody is saying, you're doing this for yourself. At the end of the day, you don't owe anything to anybody, and you're doing this for yourself, and you should just stick to it and trust the process.
I find it so interesting, this topic, because if you think about it, like 300 years ago, not a single person in history probably made $1 million by the age of 25 or 21 or 18, unless they were born into it. But now it's like you see it all the time, and there's so many ways to do it, because you have the internet, the knowledge, the podcasts, and also the books of people that have done great things, and it's here for the taking. So this thing of like parents say it from a place of love, but I also think it's important that go and get everything out of life and all the opportunities we have, but also with stability. So this idea of like just dropping everything for one thing without anything to show for it is a bit of a risk. And if I had kids, I'll probably tell them the same thing, like, hey, sort your life out. But we all got to look for other ways. Now, moving forward within the markets, is this an approach? Scalping, it can be quite draining. Attending to the markets every single day, being present in the session every day, and you kind of modified it to say, okay, I want to have a life, so I'm not going to trade during the night. Do you think you'll always be trading in this way, kind of scalping, trading almost every single day? Or do you think eventually you'll transition to swing or any other approach?
So with the way like my risk to reward is, like, even if I do trade only once or twice a week, it would be an enough risk to reward that I could just live my life. Obviously, like I said earlier, I'm only on the charts like 3 hours a day now. So for the rest of the day, I have all the time to work on other projects and whatever I need to do for my life. So me personally, I would think that I would stick to it, but I would probably maybe like not trade like full 5 days a week, maybe dumb it down to only 2 or 3 days.
Do you think you'll ever add more currency pairs or trade GJ and gold, for example? Or why did you like swap?
So, the market has changed a lot, and I see a lot of the patterns that are on GJ nowadays. It moves a lot slower than it used to move before.
I've noticed too.
Yeah. So that's why like I was kind of steered away from it, because I like volatility. Since I'm a scalper, I like to be in and out of the trade. So the only other thing that I would do is here and there, like every now and then, I will trade US 30 or SPX 500. I would take trades on that, but that's very rarely, like probably once a month, if I see a very good setup on it.
You just said I like volatility, and usually people shy away from volatility. People don't get into crypto because it's too volatile. I personally, for example, I didn't like GJ because it moved too quick. I preferred EU; it was slowing. So, what is it in volatility that you do like? Or why do you say it's a positive?
Because a lot of the times, like, I don't like being stuck in consolidation. Like, sometimes it makes me impatient, and a lot of the times, like, in the beginner years, like when I was in consolidation, it would make me second guess my trades. So when the volatility is high, I'm easily able to achieve the risk to reward that I'm aiming for in a shorter period of time. So at the end of the day, trading plays with your emotions. Trading teaches you a lot about yourself that you've never learned before. And that goes back to the psychology aspect of it. So at the end of the day, like fundamentals, a lot of volatility comes in when they drop. But at the end of the day, fundamentals are a catalyst to technicals. If your technicals are on point, the fundamentals will always just bring the trade to the direction that you're in.
Now, you mentioned news. This was off camera. News is the catalyst for price. So it seems like you're not a huge believer in fundamentals in the sense of you don't need it to be profitable, right? And you rely heavily on your technicals. Elaborate on that.
So I know a lot of traders, like, they like to like watch the news. They're going through these Telegram channels, these news Telegram channels. But at the end of the day, a lot of that is to confuse you. That's how I feel about it. Because sometimes, there could be a certain, like, an interest rate hike or something, and the market would just go in the opposite direction than it's supposed to. So they are trying to fake you out in a way, because if all these fundamental pages or these Forex factories and all these pages that have all this news on it, and they tell you certain pairs are bullish or bearish. If they were right, then everybody would just use that. Why would you need to learn trading? That's how I feel about it. So that's why I feel like technicals is always key. And fundamentals, the only thing I look at is I will open up Forex Factory and I'll know that time that the certain meeting is happening, or CPI, or NFP or something's happening. I'll just take that in consideration that this is happening at the time.
Would you shy away from a day that there is a big red folder news release, or you still trade this session normally?
I still trade the session normally. If anything, I would enter a little bit earlier just because of the spreads getting widened during the last minute of the trade. Yeah.
Do you have because some traders I know, they do stop loss or TP, one or the other.
Yeah.
Other traders obviously use a break-even protocol. With that in mind, because you might end up in a news event, are you modifying your break-even strategy? Do you even break even at all, actually?
Yeah. So at least after my 1 to 3 risk reward, if I'm still holding, then I'm gonna move the stop loss to break even. I'm gonna go risk free on it. So if I'm still aiming for that 1 to 5, then my stop loss is gonna be break even at the 1 to 3 point, and just letting the trade breathe and ride itself.
Now, you mentioned a little bit about psychology, so I want to talk about this topic because it's important, especially because when I spoke to the fundamental traders on the show, or spoke to the swing traders on the show, they don't really like the scalpers or the lower time frame traders, because they just say it's too complicated. And also they just say it's a lot of noise, and they also say it's a lot of emotion. And to an extent, I understand where they're coming from, even though I'm doing similar, is because it's very easy to take 2-3 losses in a row. It's very easy to have a string of losses in a short period of time, which is an emotional toll. It's very easy to feel greed more because you're watching price action on the lower time frame, and ideas and emotions can come. What kind of emotions did the lower time frame and scalping bring out of you, and how did you resolve it?
So at the end of the day, it goes back to the risk to reward as well, that I'm not afraid to lose a trade or 2 or 3 trades back to back, because of the fact that I know that I can capture that 1 to 3 to 1 to 5 risk reward on the next trade, and it will bring back all the money that I've lost. So at the end of the day, just treat every trade very, very similar. At the end of the day, like even with risk management, obviously I stick to risking max 5% per trade. Obviously, like if I'm risking 5%, that is an A+ setup. But 80% of the time, I would say I do risk like 3% a trade. Yeah.
Oh, actually, it's quite more than I thought. Okay, what is the reason you are relatively aggressive as opposed to 0.5 or 1% risk per trade?
So it's also different because I also trade live capital and not funded capital. Now, if I was on a prop firm, then I would stick to maximum 1 to 1.5%, because obviously you have the drawdown restrictions on it. But being on a live account, I have that freedom that I can stick to, this 3 to 5%. And, even if I do go and draw down, I could still come back. I'm not going to lose the account and having to start over. Yeah.
So let's say on a certain week, you've had like the market is presenting as you like. Within your strategy is just the market is presenting in a favorable way for you. So therefore you've had 4 or 5 A+ setup days.
Yeah.
Do you ever consider, like, at the end of the week, I might have put on the market 25% of my account exposed, not at once obviously, but a cumulative risk?
Yeah.
Is that something that is a consideration, like, I don't want to put that much, or do you just view it as individual risk and it is what it is?
So I think about it as individual risk at the end of the day, and obviously, like I said earlier, it's just about the probabilities and the win rates.
How do you deal with it? Because I'm just imagining myself, because I actually am quite conservative. I think it's also by nature. It's not necessarily a confidence thing in the market. It's just some people are more aggressive and risky. Some people are more conservative and reserved, and neither are right or wrong. It's a personality type. But in your shoes, if I was there, I would be like, I'm risking 3, 4, 5% to trade. And obviously we can have a losing period. And even if your win rate is good, even if you have a 75% win rate, a trader would love that it's win, loss, win, loss, win, loss. So then your equity curve is going up, you're having losses, but your risk reward is covering you. But when you do have a losing period, which happens, as you said, to the best of us, what happens when you've taken 4 or 5 losses in a row and it just happened, you're going a little bit aggressive, just to mentally absorb a 10, 15, 20% hit, even though long long-term you're profitable, you can crawl out of it. Just those emotions in that period on a short term where you have taken a bit of a hit on the accounts.
So when that happens, I'll take a little bit of a step back and I'll analyze as to why I'm taking those certain losses. Because I'm somebody that, whether it's a win or loss of the trade, it's good to always analyze the trade after it's over, so you could learn from it. At the end of the day, everything is a lesson in the market. So, you know, in those periods of times, win streaks and losing streaks, they happen. They happen to all of us. I'm sure you know. You've been in periods where there might be psychology, something's going on in your life that is taking a toll, and you're not looking at the market with the same clarity that you were looking at before. And a lot of the times, my losing streaks, they have happened because of the clarity issue. Like maybe I was dealing with something, or I was focused with something else while I was trying to trade. So I tend to take a little bit of a step back, but I know that I can always bounce back from it because of the risk reward. I know that, if I do lose maybe 3 or 4 trades in a row, it's fine because, winning 1 to 2 trades right after that, I can make that money back. But at the end of the day, I'm not also chasing the market. I look at it as individual setup.
Talk to me about like year one taking losses and how your attitude was, your response was, your overall behavior on GJ at 3 a.m. taking a loss compared to now, 4 or 5 years in, I think, taking a loss. Is there a difference in approach and behavior and responses to losses from a beginner to a professional?
Of course. So obviously during the beginner years, like, I would actually get scared from the market when I would take losses. I would be like, yo, maybe I'm not doing something right. Or, I need to refine my strategy. But, I put that to the side because not every strategy is 100% profitable. Like I don't know like banks that are like even 100% profitable. So I know that like every strategy is always going to have, one of those days where there's certain things will not align, and there's going to be something that's not going to work out for the day. But at the end of the day, there's always a tomorrow. That's how I look at it. Like if I didn't win today, then there's always a tomorrow. If today I didn't catch a setup, then there's always going to be a tomorrow. Yeah.
Right now you are pretty comfortable trading gold, and gold is like seems seasonal, and it depends on the geopolitical factors. It depends a lot, and it's a hedge against the US dollar. It's usually the safe haven. Have you noticed trading gold any kind of seasonality? So obviously you have your A+ setups, and that's an intrasession perspective. But what about like month to month, quarter to quarter? Have you noticed any quarters are better or months are better or worse?
So I feel like Q1 is usually better on gold than Q2, is because during the summer I feel like the volume is a little bit less, and the markets, they consolidate a lot. But Q3 and Q4 it usually picks up, and especially Q4 going into November and December, the volatilities are very higher on gold historically. But the way the economy is right now, there's so much geopolitical issues that are going around in the world that sometimes volatility is in the middle of nowhere. Like with the wars that are going on and all these crises, with the whole economy, it's been pretty straight year round. Yeah.
Have you noticed that because you are trading gold now, GJ, I understand your point of like technicals is leading and price factors in fundamentals. In fact, we are the last to know the news event anyway. So the big institutions have already laddered in their positions pre-news event. So I'm completely understanding that. But what about not news events like red folder news? What about just like situations in the world or like crisis or these kind of things where gold is the one that's usually affected the most? When a war breaks out or when certain tensions arise, gold is the one that's hit, and that's usually unpredictable in the sense of a news event. People know before NFP, the big institutions know what's going to happen. But when it comes to a war and these kind of big things, gold, I feel like, is subject to more randomness in those moments. How do you navigate those situations where you're trading completely normally, you have your strategy and it's working well, and then a war breaks out and gold starts to move a bit different? What do you do in those kind of turmoil situations trading gold?
So especially with sometimes like when like if a war or something economic is going on, then a lot of times gold is relatively going to be in the bullish side, it being a safe haven. So a lot of times, I would switch my sentiment towards being more bullish.
It kind of gives you a trend.
Yeah, it kind of gives me a trend. Yeah.
Okay, fair enough. Well, to kind of close off, because we are tight on time today, I want to speak about golds. Moving forward, you've already achieved a lot at your young age, and compared to your peers in high school and so forth, you have already exceeded what they probably would have expected. Probably your parents too are very proud of what you've done. But I can see you're also an ambitious guy. You want to do a lot, and I just want to hear kind of your thoughts moving forward, as you progress through your 20s into your 30s.
So to answer that question, like, obviously I do have multiple goals and dreams that I want to achieve. Obviously, like the cars and stuff, I'm already doing it. I'm working on, actually building a new custom house. And just, I want to diversify my portfolio on more investments. I want to travel more. Obviously, I'm going to be visiting you in Dubai in November as well. So, yeah, I mean, just trying to see how life goes. At the end of the day, just going day by day.
There we go, bro.
Yeah.
Aman, thank you very much for joining. I think it was a good episode, and thank you for flying down, bro. It means a lot. Take it.